Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about the top 7 best undervalued stocks to buy right now that are not only fantastic growth stocks that pay a very impressive dividend, but these companies are also issuing or have issued very impressive share buyback programs, and we'll discuss what this means in the video. So literally, these are the types of stocks where you can buy and hold them forever just because of how good these companies really are fundamentally and financially. These companies have a plethora of things going for them, and I personally plan on never selling these companies. So for more videos like this one, remember to go and smash that like button right now, comment your thoughts down below about what your favorite stock is, subscribe if you are new, and without further ado, let's jump right into today's video. So, I also want to mention that Webull, which is a brokerage platform similar to Robinhood where you can buy and sell stocks and cryptocurrencies, has a fantastic deal for you right now. If you go and press the link listed and linked in the description box down below, you sign up for Webull, you invest $100 into any stock that you want before June 9th, you will be receiving 6 free stocks. So I personally would invest into ETF VOO because that is an ETF that tracks the S&P 500, which is a very safe investment in my personal opinion. So literally, Webull is giving you free money to invest, and here's the best part. If you want to, literally you could sign up, invest your $100 into VOO or any stock of your choosing, you receive their 6 free stocks, then you could just liquidate all of your assets and investments and pull your money right back out. They are literally giving you free money. Now, hopefully they want you to stick around because I do think they have a very good brokerage platform. Oh, I almost forgot. You will also be automatically entered in to win $12,000 by simply signing up, investing, and receiving your 6 free stocks. You're automatically going to be entered in to win $12,000. So with that being said, best of luck to you. But now let's jump into today's stories. So on screen here, these are the companies that we are going to be going over, and I personally own all of these companies. We have ExxonMobil Corporation, ticker symbol XOM, which is an absolute oil giant who recently launched a new $10 billion share buyback program, and they offer a very impressive dividend yield. But before this video gets going, I want to define what a share buyback program is. So basically, this is when a company buys back shares or stocks from the open market or from shareholders directly, and this has very positive side effects, such as increasing their overall earnings per share because it's lowering the amount of outstanding shares that are currently on the stock market, and by doing that, it increases their EPS or earnings per share, which reflects very positively on the stock price. Also, just by lowering the supply in some instances on the stock market, this also increases the overall price of the particular stock. So overall, when a company buys back its own shares from the outstanding shares on the stock market, it has very good side effects for current shareholders. And normally companies tend to do this often, especially if they are very solid blue chip companies, such as the ones that we are talking about today. The next company we're going to talk about is the Allstate Corporation, ticker symbol ALL. And this is an insurance company that has announced a new $5 billion stock buyback program, and it also offers a dividend yield of around 2.35%. So for me personally, if these companies offer a dividend yield, I always enable drip investing. And if your brokerage platform allows you to enable drip investing, basically every time you get a dividend from any company that offers you a dividend, it takes that dividend and automatically reinvests that dividend back into the company, so next year your dividend is going to be slightly larger. And I have this enabled on literally all of my brokerage accounts, and the ones that don't have it, I do it manually. The next company we're going to be talking about is HP Inc., ticker symbol HPQ, and this clearly is a computer company that has a very good dividend yield of around 2.31%, and they offer consistent share buyback programs. Then we're going to talk about Intel Corporation, which is a semiconductor giant that also has a strong dividend of around 3%, and this is also a good growth stock. So remember, not only are these stocks undervalued undervalued, which makes them a fantastic buying opportunity, and they offer strong dividends, but some of these are also good growth stocks that also offer a steady share buyback program, which makes us very bullish. Literally, these companies check every single mark regarding a company and stock that should be in your portfolio, in my opinion. And then we're going to move on to Ameriprise Financial, ticker symbol AMP, and this is a financial services company that offers a dividend of around 1.52%, and they have a significant repurchase program going on. Next, we're going to move on to Marathon Oil and Gas Corporation, ticker symbol MRO, and they have a $3 billion stock buyback program, and they offer a dividend yield of 1%, and many analysts believe that this company is a fantastic buying opportunity right now. Then we're going to end the video off with Oracle Corporation, ticker symbol ORCL, and they offer a dividend yield of 1.6%, and they also have a gigantic share buyback program, which makes their stock extremely attractive. So these companies are literally undervalued right now, and because they are undervalued, they are repurchasing their outstanding shares, which positively impact shareholders. For instance, by buying back shares, it's going to increase the remaining shareholder stake in the company, which is always good news. And a share buyback program ultimately allows for the company to make a higher dividend per share payment in the future, which is fantastic news. So your dividends are going to be increasing because of this. And lastly, the number of shares outstanding automatically increasing earnings per share like we talked about earlier. So this is going to reflect very positively on their earnings report, particularly in regards to their EPS or earnings per share. So right here we have a little table, and it's going over the companies that we just mentioned, and over here we have their current stock prices, and then over to the right of this, I have the range in which analysts deem that the stock is currently worth or will be worth over the next 12 months. So over here we have the bearish price targets, and then over here we have the positive bullish price targets. So for ExxonMobil Corporation, the low-end analyst price target is $66, and the high-end price prediction is $166, while the current stock price trades for around $87.96. Now, ideally, we would actually want their current stock price to fall below their low-end analyst price prediction, which would make these companies extremely undervalued, in my opinion, if these analysts are actually correct. However, according to the author of this article, he believes that all of these companies are actually undervalued right now, which is why these companies are initiating or have initiated a share buyback program. Because clearly these companies want to buy back their shares at a very cheap price. So you can look through this list here to say that Allstate is currently trading at $143, but the low-end analyst price target is $116, and the high-end price prediction goes as high as $188 over the next 12 months. So if any of these companies are currently below these low-end analyst price targets, that just makes them more undervalued, which would make them a great buying opportunity. And I personally own every single one of these companies on this list, and I'm going to buy these and hold them literally forever with drip investing on. But with that being said, let's jump right in to the analysis portion of the video. So let's start off with ticker symbol XOM, which represents ExxonMobil Corporation, and Exxon pays a dividend of around $3.52 per share per year, and they have a dividend yield of around 4%. And because the stock price is trending pretty low lately due to the bearish sentiment of the overall stock market, with the cryptocurrency market crashing, rising interest rates, increasing inflation, fears of a bear market, and threats of a looming recession, this is a fantastic time for these companies to buy back their shares, which is very beneficial for shareholders. So Exxon initiated a $10 billion share buyback program on top of its already very hefty dividend payment. And on top of that, Exxon is focusing on paying down its large amount of debt. So if we add the $10 billion share buyback program on top of their dividend yield of around 4%, this is going to generate shareholder worth of around 6.7%, which is absolutely phenomenal. So overall, this is a fantastic hold, and this doesn't even take into consideration the full stock price appreciation of what analysts think this company is actually worth. Now let's move on to Allstate, which is an insurance company that is based in Chicago, and they pay an annual dividend of around $3.40 per share, which which means they have a dividend yield of around 2.4% at the time of this video. The company spent $3.3 billion in share repurchases, and this is absolutely huge because this would equate to around 8.35% of the overall market value of the company. So if we combined their dividend yield of around 2.4% with their overall share buyback program, which is going to generate worth for investors of around 8.35%, this is going to generate shareholder value of over 10%, which is absolutely phenomenal if we combined their dividends on top of their share buyback program. And again, this does not include the future stock price appreciation of this overall company, because remember, these companies are undervalued according to the author of this article. Next, let's move on to HP, ticker symbol HPQ, and this is an imaging and printing products company that pays an annual dividend of around $1 per share, which would equate to a dividend yield of around 2.54%. HP spent $271 million on dividends and $1.5 billion on share repurchases. This would equate to around a 6% total yield for shareholders, which is absolutely amazing. And this is one of the reasons why investors such as Warren Buffett love this company, because not only do they have strong dividends, but they also offer good share buyback programs. And this is why Warren Buffett has a large stake of around 11.4% in this particular company. Moving right along to Intel Corporation, ticker symbol INTC, which is a semiconductor play, and they have an annual dividend of $1.46 per share, which equates to a 3.05% dividend yield. They have very strong free cash flows of around $11.3 billion, and they used $2.4 billion of those dollars to repurchase around 39.5 million shares. This means that they generated shareholder value of over 4% if we include their 3% dividend yield. So this is not ideal, but Intel is to me a pretty good growth company that offers a strong dividend, and they offer share buyback programs on top of being undervalued in this bear market. So literally, this is a win-win-win-win situation. Now we're going to move on to one of my favorite stocks on the list, which is Ameriprise Financial, ticker symbol AMP. And this company offers financial products and wealth management for their consumers. They have a strong dividend of around $4.52 per share. However, their shares currently hover at around $270 to $300 per share. But if you can't afford to buy an entire share of this company, look into fractional shares. Brokerage platforms such as Fidelity, Webull, and even Robinhood offer fractional shares, which means that if I only have $10, I can invest $10 and I can buy a fraction of their $300 share. And this also would give me a dividend. However, it's not going to give me a dividend of $4.52 because that is based off of their total share price of around $300. Now, on top of this, the company is very profitable, and they do have a large buyback program. The company said that it is going to fund $3 billion in share repurchases. This means if we take their 1.52% dividend yield and their 6.07% buyback yield, that is going to give investors 7.6% worth of overall value, which is absolutely phenomenal. And again, this doesn't take into consideration that the stock is currently undervalued and the stock price could continuously appreciate. Our next company we're going to be talking about is Marathon Oil and Gas, ticker symbol MRO. And Marathon has been increasing their quarterly dividends by a penny each quarter, and although that doesn't sound like a lot, it actually is. Right now they have a dividend yield of around 1.05%, which would equate to around 28 cents per year. And they have offered a $3 billion share buyback program, which means that as this company continues to move higher in their overall stock price, the dividends that you bought when the stock price was lower are really going to come in handy to start building you not only passive income, but also your future wealth generation. Lastly, we're going to talk about Oracle Corp, ticker symbol ORCL, and Oracle pays a yearly dividend of $1.28 per share. This means that they have a current dividend yield of 1.61%, which would equate to 32 cents per quarter. And based off of the history of Oracle, they tend to increase their dividend yield, which means that their next dividend increase is supposed to happen in mid-June of 2022, so that is definitely something to look forward to. They also, last quarter, spent around $600 million buying back around 7 million of their shares, and this is going to result in investors not only receiving an immediate payoff from investing into companies like Oracle, but it means that the company is confident in their future stock price appreciation. So I would love to hear your thoughts down below about any of these companies. What company would you add to this particular list? What do you think of these price targets by analysts? And if you don't mind, remember to go and smash that like button right now, subscribe if you are new, and I'll see you in the next YT video.